We start with SAC Capital. Lawyers for the $14 billion hedge fund pleaded not guilty today to criminal charges of letting insider trading flourish at the firm for more than a decade. It's an unprecedented step by the U.S. federal government indicting the hedge fund itself and not necessarily just individual traders. Jessica Stone has more on what these charges may mean for other hedge funds.
Attorneys for SAC Capital left a U.S. federal courthouse Friday without a word after pleading not guilty to criminal charges of fraud. It's the first time the U.S. government has criminally charged a hedge fund for insider trading instead of individual traders.
The scope of illegal trading was deep and it was wide. It spanned more than a decade in time, involved the securities of at least 20 public companies, extended across multiple sectors of the economy, and benefited SAC to the tune of at least hundreds of millions of dollars.
The U.S. Securities and Exchange Commission, or SEC, has filed a separate civil case against SAC's billionaire owner Stephen Cohen for failing to supervise 2 employees. But so far, Cohen faces no criminal charges. Yet former SEC enforcement attorney Jacob Frankel tells CCTV the government appears to be using this indictment to build a criminal case against Cohen.
The government has targeted Steve Cohen himself.
Since the early 2000s, global investors have been hit by a wave of corporate fraud scandals, including Enron, Lehman Brothers, and now SAC Capital. The U.S. government already has anti-fraud rules on the books at the SEC. Frankel says the government's focus now has shifted to high-profile enforcement.
I think that the U.S. government is actively investigating insider trading and feels as if the larger and more expansive its approach to insider trading, it has a better chance of creating an effective deterrent message.
Sentences are getting tougher, too. In May 2011, hedge fund owner Raj Rajaratnam was convicted of using inside information to reap millions in illegal profits in the stock market. He was sent to prison for 11 years, the longest sentence for insider trading to date. Frankel says he's giving a warning to the hedge funds he now consults with.
There is now a heightened focus on your procedures, your policies. You have to make sure that they are going to work, because this case means if the government is not satisfied, they now may charge the institution itself, not just the traders.
Frankel predicts that the defense will argue that they had adequate compliance systems in place, but that the charges against SAC stem from a few bad actors, not a systemic and permissive environment, as the indictment alleges. SAC attorneys will be back in court, Philip, at the end of September.
Jessica, one of the questions a lot of people are asking is this mean there's an uptick in the enforcement of insider trading?
Well, there's certainly talk that there is. I just checked the figures, and they've been in about the 50s per year for the last few years, but they do include a lot of international companies and trades, including insider trades that were done on the Nexen CNOOC deal last year. A Hong Kong firm actually agreed to pay $14 million to settle those charges, just one of many international examples of insider trading charges. Phil?
Jessica, thank you. Joining us to talk more about how this case will impact hedge funds and banks and regulatory issues and everybody else here in the United States. We're now joined in New York City by Charles Ortel. He joins us from Newport Ventures, and also Russell Duncan, a former U.S. prosecutor here in Washington, D.C., lawyer at Shulman Rogers. Let me start with Charles in New York. This SAC, this made very, very big headlines when it was first announced, and I want to ask, are you surprised?
Not in the slightest. I mean, it's sad to say you can put whatever tough laws you want to put on the books, and it seems that there are always people who decide they want to try to game the system. Now, in this case, this is a very serious matter. The investigation has now reached, it would appear, the very top of the firm. There's a long road ahead, I think, for the government to prove the criminal case. You know, it's most upsetting, and I think investors in the global capital markets deserve to have a level playing field. But frankly, the regulatory apparatus, I don't think, is up to the task. I don't think it's strong enough.
Well, we have somebody here who's, who may know a little bit about that, Russell Duncan here in Washington, D.C. And Charles brings up a good point, because insider trading happens not just here in the U.S., but everywhere around the world.
Yes.
The issue is about enforcement. If you're not going to catch the people who are doing the wrong, you go down this road where everyone says, well, it's okay to do it because I'm not likely to get caught. You're a former prosecutor. Why doesn't the U.S. government have more resources to do this? What's the issue?
Well, it's a little bit of the question of how much money there is at stake. And so what happens in a situation like this, it's like we all do. We all go a little over the speed limit. And it's some question at some point whether you're going too far over the speed limit. And I think what's happening in some of these cases, the amount of money at issue, the amount of dollars and the profits these traders can make, causes them to get very close to that line and then not really see where the line is and then go over the line.
But the big question is, where is the line? And Charles, let me ask you this. So you and I are having lunch together, and you tell me that there's some good news about a potential drug company that you expect. Now, on the other hand, you might tell me something more specific to say, hey, on the Friday, there will be this announcement. Now, obviously, that's insider trading, but where do we draw the line? What exactly is the definition of insider trading?
Well, it's a somewhat murky area, and my legal colleague probably will do a better job explaining it. But the issue here is that when you have material, market-moving information that comes into your possession, you have a duty to keep that confidential. And unfortunately, a lot of people misabuse that trust. One thing you haven't brought up yet is, in actual fact, government employees at present, I believe, are exempt from certain provisions of the Insider Trading Act. And there's a lot of very sensitive government-controlled market-moving information. I wonder and suspect whether certain government officials are, in fact, trading or helping friends trade on insider information. So
that is a good question. It's a good thing that you're far away from Washington, D.C., because it's tough to make friends if you're going to have these conversations at the restaurants here in Washington State. And he brings up a good point. Do the politicians really want to crack down on insider trading? We hear it a lot, but he says, hey, look, a lot of government officials also run that gray area as well, and we've seen that in the press.
Well, you make an excellent point. It's a very gray area. So at what level do you reach the point where you're gone from you're breaching a fiduciary duty, or you're just talking to a friend? If you're just talking to a friend and you're not telling them, so how's your company doing? My company's doing really well. We're having a good year. That's not it. My company's doing really well. We're having a good year. And you know what? We're about to buy this other company, and we're going to get that much bigger. At that point, you started to cross the line.
So perhaps the line is something a bit more specific, is what you're talking about. Either a specific number of earnings, a specific acquisition, or a specific action that a company is going to take in the future.
Well, as Charles just said, the issue is whether or not you have material information. And to take it in a very simplistic layman's term, so it's material. What's material information? It's information you want to know. You want to know before you make an investment.
You're here in Washington, D.C. You obviously speak to a lot of regulators. Is this the beginning?
Used to be one.
Is this the beginning of a new drive by the SEC to go after insider trading, or are they just going to specifically focus on SAC Capital and make an example out of them?
Well, I think they're using SAC as an example because of the conduct of that, but the idea is they're hoping that this will have that ripple effect that will cause and deter other people from doing it. They did it in the Raj Rajanatam case. Now in this case, these are very powerful, very wealthy individuals who are now being charged. I mean, Mr. Cohen's issues are not, he's not done yet, and he could have some very significant issues. And if you're a trader out there and you're saying, well, it's one thing they'll take some of my money, it's another thing they'll take my livelihood, they'll send me to jail. That's the sort of thing that causes people to pause, and I think that's part of what the deterrent value that the regulators are looking at and the law enforcement authorities are looking at.
Charles, I had the fortune of working on the buy side, and I worked with a lot of sell side and buy side managers, and I can tell you the culture is, it's very aggressive, and it comes down to one thing: are you making money, and what advantage do you have? Are any of these cases by the U.S. government, are they really going to change the culture on Wall Street?
Sad to say, I think not. I think one thing that might change things radically is a sort of a different view of the future that I and some other people have. I don't think we are through the worst cases of the financial crisis, and I actually think we're about to enter shortly in September, roughly September through February timeframe, a redo of what happened in 2008, 2009, which I hope will cause people to look far more closely at what actually happened in 2008-9, both with how the companies got in trouble that needed to be rescued, and then how the government behaved in the rescues, and then in getting out of the rescues. I think there are some deep and profound issues that affect the way in which participants in the market were treated, actually by the government and the Federal Reserve System. So I think you're at the beginning of a very deep drama here.
All right,
that will
Charles,
be quite absorbing.
I need your help here, because for our global investors, a lot of them, if you ask them, why don't you invest into the stock market, whether it's the U.S. or Hong Kong or London, one of the typical answers you typically hear is the fact that, what chance do I have? I'm the small investors, these big billionaire fund managers, they basically control the market. What do you tell those investors?
Well, that's the huge moral hazard problem. I think what's going on now, the simplest way to think about the global market, I believe, is that the Federal Reserve and the central banks have suppressed interest rates around the world that therefore artificially propped up all asset values. So it's red flags in my mind are flying in every major securities market in the world. So the right thing, I think, to do would be to retreat from the securities market and wait till the mean reverts, and you're in a situation where there are bargains everywhere. I fail to see a lot of bargains.
All right, let me get Russell in here very quickly. Can we restore confidence in the global markets?
Sure. I think that the global markets, by and large, do run in a regulated manner, and that most people do want to comply with the laws. Obviously, the clients we advise them on how to do it in accordance with the securities law. There are the rogue people, though, and there are the people, as we've seen in these indictments and in this the charges by the SEC against Mr. Cohen. There's people who get close to the line, as you say. It's part of the culture, and they just step across the line. And once you step across the line, it's easy to lose your bearings.
It's not easy to solve. Russell Duncan, thank you very much, and Charles Ortel joining us from New York City. Thank you very much. Have a great weekend, gentlemen.